What are the most important stocks in this market? The ones that define the moment, show you where the money's going. After a mixed day where the Dow gained 71 points, the S&P declined 0.28%, Nasdaq lost 0.52%, notable outlier. I want to explain how I choose the stocks I highlight when I come on air every morning on Squawk on the Street, so you know what I think's really going on before the bell and then right after it. You know, I'm always looking for names that are both important and possibly investable for you, okay? The process is a complex one. First, I want to capture the zeitgeist. There are two major themes going on right now. Supply chain disruption, you read about that a lot, right? And that's including energy shortages. And then the fact that interest rates are going higher. They went up 6% last week. That's a lot. You need to know about these two themes every minute of every day if you're going to pick stocks, because that's what's driving the averages. I also try not to mention the same stocks that we've already been discussed here. You don't want overkill. I know a lot of you watch that show. It also means eliminating many situations we talk about at the top of Squawk on the Street. With interest rates going higher, you know the banks are going to do well. That's become a duh moment because this market isn't about being clever. So people just buy the banks without question, as they're supposed to be the obvious winners here. Buy, right? Of course, this is just a knee-jerk reaction, and these are often nonsensical. Sure, the banks should be making more money, but when they actually report in 2 weeks, their earnings numbers will have nothing to do with the current long-term interest rates in days to days. This has nothing to do with the quarter. It's all about what happened over the last 3 months. The banks have been a disappointment relative to their stock prices because they often run, just like now, on some kind of theory that has nothing to do with earnings, but has more to do with the zeitgeist, okay? When we get the actual numbers, they could easily disappoint because expectations have already been ratcheted up. Now, lots of people confuse these two things. I want you to understand this. They say, we get a lot of calls like this, a lot of emails. Company beat the expectations. Why didn't the stock go higher? The answer is often that the stock ran into earnings because of moves like today, which are divorced from the actual reporting numbers. The expectations are just what the analysts are looking for. They don't necessarily represent what investors are looking for. Long story short, I wasn't going to mention the banks on Mad Dash or Stop Trading because now they're well covered.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.